Alright, so let's kick off this video series using the acronym TREND, and the first letter stands for trouble. So I'm going to break trouble into two components that we're going to talk about and frame this. The first is failure, and the second one is aggression. So if you remember on the failure side, if you remember, Lehman Brothers went bankrupt 9/15/08, and that really is what we were already at a very vulnerable part in the market, but that's really what sent us crashing down in '08 was that failure. So when you look at the failure potentials, not just the United States but around the world, so Greek is old news, right? Greek is not big enough in order to really create any kind of failure, but in Europe, Italy and Portugal certainly are. And then in South America, you have Brazil and Venezuela for reasons that are in the newspaper every single day. And the reason country struggles, or I'll use the term failure, are important is because all these countries have issued debt which someone holds as an asset on their books. And if that asset is devalued or goes under, then the books have to be adjusted down. So if you are a country or a company and you have your financial statement and you have assets on one side and liabilities on the other, and you're trying to report, right? You're doing your own reporting to the marketplace, whether it's Wall Street or some other exchange, and you show a positive number, and one of these things come along and you go into the negative, then everybody has to readjust. That's why we have to pay attention to the failure of the countries. What about companies? What about corporations? Well, let's look at a pocket that is incredibly vulnerable, and that is the United States frackers. So I've written and done videos a lot about this, and oil is slowly creeping back up, right? It's slowly creeping back up in the 50s range. And just so you know, the U.S. frackers in October of 2015, they had to renegotiate the deal on all of their operating lines of credit, and they convinced everybody, they convinced their bankers that they could run their business at $55 a barrel. Remember, when all these frackers took out their $550 billion in high-risk debt in order to finance these operations, oil was what? Well, oil was between 100 and 110, and it all made sense because U.S. frackers, their break-even is 95. So if your break-even is 95 and you can sell in the 100, 110 range, then you're making money and everything works out. All of a sudden, oil goes to 55. You have to convince your banks that, you know what, we can do this. So what they did is they closed a bunch of the unprofitable oil rigs and they slashed expenses like crazy. The problem is, as soon as they made this deal, what did oil do? That's right, oil went down even more into the even, for a little period, sub 30, which made all this stuff not work. So every single month that went by where oil was below 55, the deal they struck with their bankers, they weren't able to pay their obligations. So we're back up close to this, but they're still not out of the woods yet. And think of it this way. If you have a mortgage at home and you miss a payment or you're slow pay, the bank can be pretty lenient for a while, but you go too long and they just simply say, you know what, we're done. We're done and we're going to foreclose. Well, we are incredibly vulnerable to this happening to the U.S. frackers. Okay, so let's move to the aggression side. So aggression, we have Iran, and Iran can be aggressive with what? They can be aggressive with military, and it's not just against Israel, it's also against Saudi Arabia. All you have to do is look at a bunch of videos and writing I've done about Saudi Arabia and why oil is down, and you can see the conflict here with Iran. So they can have aggression with military, but they can also be very aggressive with what? Against the United States, they can be aggressive with cyber attacks. Russia clearly fits into both the military and the cyber, but they can also, there's another dimension here, they can also be aggressive with currency positions. China, clearly military, clearly cyber, clearly currency, but this is where I want to spend a little bit of time because I've done a lot of videos, a lot of writing on this issue here. China is not our friend. Last year they launched CIPS, Chinese International Payment System, which is trying to convince people to stop using the US dollar as the world reserve and start pricing things in the renminbi, the yuan, the Chinese currency. I did an entire series on currency wars, and that's certainly a part of this. There's another aggression they can do on the currency, the Chinese, and that is every month the U.S. Treasury has an auction window where we sell bonds. And we need to sell those bonds in order to pay our debt because we don't have enough tax and tariff revenue coming in to pay our bills. And China has consistently been a huge purchaser of those. They currently are sitting on $3.4 trillion US dollar reserves. That's down from $4 trillion. 3.4 is still a lot of money, but just so you know, an aggressive position in the auction window could be 1 month where they just simply say, you know what? We're good. We don't need any more. And we go 1 month at the U.S. Treasury auction window where China does not buy a big batch of our bonds. We are in a world of hurt. So aggression, Iran, Russia, China. I'm going to put one down that you are not suspecting, and that is central banks. Thinking, why would central banks be aggressive against us? Well, all you have to do is look at the videos I've done over the last 3 or 4 months and you can understand that. But when we talk about war, the central banks, there's clearly a currency war going on. And any one of these, aggression, failure, or some of the other letters in the acronym TREND, can spell out a reason that 2016 is going to be a down trend. I'm not saying second half, I'm probably saying fourth quarter downtrend, and dare I say repeat of '08? I do dare say that. In fact, I think it's going to be 2008 on steroids. Okay, so some food for thought. Be on the lookout for the next video coming in where we'll fill out the rest of the trend acronym. Thanks for watching.